recorded.
All right. Well, good afternoon, everybody. Thank you, everybody that is joining live today, and those of you that are seeing the recording. We are super excited to announce this is our first ever live podcast with Next Level Insurance. We have a few guests here today. We have Pat Jensen. She's going to be the moderator. So any questions that come in, please direct your questions to her. She'll record all the questions for you. Her email is pjensen@nextlevelinsurance.ca. And we have a special guest joining us there today. For those of you who might have remembered over the years working with you that I always check in with either money managers directly at least once a month, or people that work in the back offices directly for the companies that I work with hand in hand as well. And one of those individuals that has been fantastic over almost 3 years of working together is Toby Graham from RBC Insurance. And many times we've worked together and generated value, significant value for all our clients. So welcome, Toby, and thank you, Pat, for joining there today.
Thank you.
So a little bit of housekeeping there. We have only 30 minutes today, and so we're going to keep it short and tight, and we're going to talk a lot of content there today. So as such, any questions that you have, just reach out to Pat. We were not going to have a question period on this recording or this live webinar podcast today because of the topic that we are going to discuss there. So the topics today, we're going to discuss a quick economic overview. We're going to talk a little bit about some estate planning. We're going to talk about some wealth buckets and some simple solutions to put this all into your repertoire of financial planning and why this is so important to have in place. And just before we, kind of start our session here in far as content, I just want to share a little bit about, unfortunately, over the last 4 years, don't want to sound too morbid or anything, but I've had 4 clients that had passed away. And at that point in time, I can't stress enough the importance of having your estate planning done beforehand, as well as the value of segregated funds in regards to it maintains privacy and quick settlement of funds within 5 business days after a death certificate is produced. And I can't tell you enough, when you are sitting across from a loved one, the feeling their pain and loss, but being able to provide them a solution that isn't out there in the marketplace. So I just wanted to stress on that. And I'm sure Toby will speak a little bit more to that when he's talking about the estate planning. And then I just want to talk just a little brief moment before we get into Toby's market update. I just wanted to comment, the last few months, we've seen some negative returns on the market. But I just wanted to let you know that we anticipate that. Toby and I, like I said, we will meet very, very frequently. We anticipate that the market does go down. In a 5-year cycle, we might have a year where it is a little bit, ends up being negative, but we totally anticipate that, and we anticipate that there will be growth. So in summary, although the cast of characters right now are different, and there's some different scenarios going on, specifically both bonds and stocks being low, at the same period. That hasn't happened since the early 80s. But at the end of the day, this story has replayed itself many, many times over the last 100 years in the market. So nothing to be alarmed of. This is solid investing, solid companies, and we have a plan for each and every one of our clients when we did our in-depth needs analysis right when we first met there. So having said all that, Toby, would you like to take center stage there and maybe touch a little bit on some of the markets, and then we could segue into some estate planning and the value of segregated funds?
Great, Craig. Thanks ever so much. I appreciate the opportunity to be here with Next Level Insurance and to share some of the conversations that both Craig and I have had over the years and solutions for clients. Let's get right into it. Let's talk about just an overview on the markets. So what I'll do is I will ask to be able to share my screen, Craig.
There you go, and you should have that now.
Great. And we can see that?
We sure can, thank you.
Perfect. Okay, so folks, when we're looking at the markets, here's currently what's happening. These are the stock indexes, the Standard & Poor's, Dow Jones. This is the time from back east of Toronto ways, or Central Time, I should say. we've got a little bit of a mixed of this S&P up, Dow Jones and Standard & Poor's and Nasdaq's down. So yesterday it was up pretty significant. Now we see a little bit of an influx of some things. Again, when we're looking at the economy from RBC Games position, and that's RBC Global Asset Management, we really want to take a look at some of the headwinds that are in the economy right now and what's happening with the economy causing these sort of fluctuations or these ups and downs and whatnot. And I think it's important to understand the overall picture of what is actually happening in the markets that affect rates of return. But again, the solutions, as Craig had said about solutions, they're not for, as you're driving, the instructor taught you to look 5 feet in front of your car. We're taught to look a mile down the way to see it, to make sure. So there are going to be bumps in the roads. Such bumps that we're experiencing right now in the economy. Number one is inflation, the cost of living. It's going up, and it's a little bit out of control. And normally when it's out of control, there's overspending and heated markets. So what happens with that? We see the cost of living going up. We see gas going up. We see goods and services, food going up, all that sort of stuff. So as the government watches and monitors that, and as we see inflation, there's a tampering down that the government will use, such as monetary policy, which is the next point, taking money out of the market. And how do we do that? Or how does the Fed do that? Or how does the Canada government, Canada Bank of Canada do that? Raise interest rates. So as we've been raising, and there's been a 75 basis point increase in the States, Canada to follow after, they raised their interest rates. We saw sort of tampering of the brakes, so to speak. So inflation causes some concern in the marketplace, where lack of growth, slowing down growth. And that's what we've seen. But anytime there is monetary policy being implemented into the marketplace, markets always react, or they take time to react to digest what does this actually mean. So over the past 6 months, we've been seeing the U.S. warning of these big sort of tamperings, that there's, the rates are coming, rates scaring the market to slow down. And then they did implement a 75 basis point increase, with us to follow in further. And we're expected to do some little more higher tampering of the brakes with regards to raising interest rates a little bit, slowing the growth down a bit. We're going to see a change in spending habits now over the past 6 months to a year, with regards to frivolously spending worth as necessary spending or value spending in regards to cars, automobiles, schools, computers. We're going to see a little bit of shift in how people are buying. Problem is, though, with the economy and everything, people are still buying. Retail sales are up even more so. So there's still no slow in growth with regards to that factor. People are still purchasing what they can. But again, with this rate increase, we have to think about a couple of things. Your mortgage rates going up, people have to pay a little more on a monthly basis. Your lines of credit, your credit cards, all these things, or loans or whatever. So these are going to help slow it down. We also see the global economy being shocked a bit, again, by the Russian sanctions. I still find it very hard to say that we do have a war on our hands. And we do see the supply and demand for oil and gas. Don't forget, Russia is a major player in the supply of oil and gas. For most of the European countries rely on that, including China. So there seems some tempering going on when we see that. We also see the disruption of that causing prices to increase in supply and demand, importing and exporting into our country from other countries. Specifically, China would be one of the things. So right now, for example, I was just talking earlier that my car needs to be repaired. Well, that part can only come from the United States, and being an older car, it's a wanted commodity. It'll take upwards of 2 weeks before I get that part. These are some of the things that we'll have to deal with. We still see growth into the future, and we're looking into 2023 now. But all these different things add up. We see a little bit of light at the end of the tunnel with China opening up its sanctions during the COVID. We see Shanghai opening up, increasing sort of the supply and demand again. But again, how China works with Russia on its oil and gas supply, that's something to take a look at. We also see, with the increase of rates, mortgage rates, The housing market's starting to slow down a bit, right? Again, people were able, with low interest rates, being able to buy those houses very affordably. Now, with their variable rate going up, can they afford the extra $300? So we're starting to see, look at that very much so. We're also, one of the biggest concerns in the marketplace is the fixed income bond market. We've seen a huge sell-off over the past year and the safe havens. So the prices have gone down significantly. However, with now monetary policy in place, and also the tightening of monetary policy and looking at interest rates and inflation, we are starting to see the fixed income starting to subside a bit. Great. So there's not that necessary huge sell-off. Don't forget, during monetary policies or rate increases or whatnot, this is generally at a time when old bonds are cashed in and new bonds are bought. So again, we're looking down the road when we make these predictions or when we make our decisions to what to buy, and also take into account protection for our portfolios. That being said, that's kind of a brief of the economic overview. Hopefully that was very helpful to a lot of people out there. Greg, any comments?
Toby, thanks for that overview. I just wanted to run something past you there in regards to a couple of the key points you talked about. And so inflation, growth slowing, supply and demand issues there. So what I'm wondering about is, traditionally when they talk about the ugly R word, the recession word, there's your discretionary spending, so travel, etc., that kind of thing, is usually depressed, and then that starts showing in supply and demand going down. So stuff that you maybe kind of need, but you put on the back burner till some more money. So all that combined does the traditional recessionary type, the dreaded R word. But what I wanted you to get your insight on is because of COVID and because it was a forced shutdown, do you think there's some interaction that maybe the models are not totally picking up, specifically because from all the data that I'm seeing, the service side, so, the goods that you don't really need, but you traditionally do to spend when you have a little bit extra money. So that would be specifically going on holidays, travel, etc., that kind of thing, seems to be really, really robust right now, which doesn't seem to be conducive to a normal recessionary setting up the stage for that. And another thing I wanted to two-part to that observation and then get your insight on is the supply chains, supply and demand, with a rapid transition from being at home with COVID and Home Depot, et cetera, just seeing massive sales, now transitioning away from that, kind of that bullwhip effect. And I just wanted to know if maybe there might be a little bit more optimism than maybe what we're seeing now. And I just want to throw that your way of what your perspective would be on that, Toby.
Absolutely. When we talk about people being pent up for the past 2 years, not seeing their loved ones, and we're looking at travel now, we're starting to see a major increase in travel. Again, restrictions to flying to the U.S. have been lifted with regards to mandatory COVID testing. We're also seeing something very interesting with the airlines. Not as well prepared for this as usual. We're seeing a lot of restrictions on some of the flights, services and whatnot. During the COVID, opportunities for those companies to really build on infrastructure or to plan, or there was just a bare uncertainty as to when and where COVID would stop. There is a major need for travel right now. There is going to be kind of an overflow. You might see some price gouging with some of the airlines. Again, not gouging in the sense where cost of gas is going up. So if you take oil and gas, so that will reflect in ticket prices going up, more competition. Some of the also too, when we talk about travel and train, let's say the trains specifically in Europe, a lot of companies were working on CERB, or working on the benefits of government packages to help subside during this COVID time. Some companies were not forward-thinking as to what they do with that money, instead of just helping their employees and whatnot, and didn't put anything away to sort of some infrastructure. We're now starting to see some changes of what happens now that the money stopped flowing in from the governments. We're starting to see some union strikes, train union strikes. That will affect, travel. but also to supply and demand, right? Where a lot of things are transported by train. So it's going to be an interesting thing to see going forward how it all works out. There's going to be some bumpy roads for readjustment of the airlines and trains and transportation and see how that works. But that bodes really well into the next point with regards to people back to work and whatnot. Unemployment numbers are down. There are lots of people wanting to work. We're starting to see people coming back to offices now, which is very good. But also we're seeing a new wave of employment with regards to working from home, but in the office. So it's really one of those things to see how that is going to play out. So again, we're talking about technologies that enable people to work from home and increase probably in the development of that. But we're starting to see some positivity of those unemployment numbers going down. Now it's an employee market, right? People are looking for workers to come back to work. Unfortunately, I don't think a lot of them are as of yet. So again, one of those situations. Plus, during COVID, a lot of people have kind of reevaluated their personal lives and how it's worked. So lots of great questions to answer, but that's kind of my feedback for you.
Perfect. Awesome. Well, thank you, Toby. I appreciate the feedback and the high level detail on the key points of the market right now.
Great. The other part of the presentation I had today that we're going to talk about, and something both Craig and I have spoken on many occasions, is estate planning. Estate planning can be very daunting to some people. It can be very emotional to some people. It can also be very puzzling as to where do I start? And as Craig mentioned, it's all about establishing your wealth buckets. What do you have? What don't you have? What is your intent? What do you want to leave for? There's a limitation as to the value of advice that is out there in the marketplace to work with. Most people tend to go to their banks first for some value of advice, and most banks are very good at providing what they have in their products. And not to say one bad thing about banks. However, there's a limitation as to what those institutions can do or offer, that clients now have to source out other means or other professionals to help them achieve their goals, either in retirement or estate planning, such as working with Next Level Insurance. And that leads us on to our next sort of topic in our sort of coffee chat here, our market minute, is to talk about segregated funds. Not many people are familiar with segregated funds. And when it comes to estate planning, how do we make things very simple, very easy, and also to offer choice and flexibility and control to leave your hard-earned money to your loved ones in the compass of all your wealth buckets, right? Estate planning is only one piece of the puzzle to everything. And when you work with estate planning, and I've worked with Craig many years, you'll walk through his process, and Craig will share later on some of his process or some of the ideas. So what do I mean by what do I mean by simpler estate planning and segregated funds? A segregated fund is an investment offered by an insurance company, RBC Insurance, for example. It's a mutual fund with an insurance blanket wrapped around it with guarantees, specifically a maturity guarantee and a death benefit guarantee. There's no underwriting required for such a product. Let me talk to you, one of the biggest benefits in the markets right now really reflect the value of what a segregated fund can do for you. Let me share with you on the screen here. When we look at a traditional investment, such as a GIC stock or securities, and we look at the versus a segregated fund, it boils down to the value of this actual solution when regards to the death benefit guarantee, 100% death benefit guarantee. So what does that mean? Well, with 100% death benefit guarantee in this model, any money deposited to this contract up to age 80 receives the higher of three things when you pass away: the total amount of money you put into the contract, the recent value, because these products allow you to lock in gains into the market, and also two, market value. Whichever is highest of those three, you're sure to get. So when we walk down this path, okay, what happens if I do pass away? I tend to sort of, asking people about, well, have you written a will? Why haven't you written a will? And there's many in estate planning and whatnot, there's many features that that Craig had alluded to before. One, it may be too complicated, or two, right here in the heart, it's too emotional. I just don't want to deal with it. Three, I don't know who to go with. My bank hasn't really offered me this type of approach. But let's look through an example. If you were to use a segregated fund, and share with you some of the hot buttons that I believe are very important to those discussions that you should have with a professional and valued advice such as Next Level Insurance. Number one, when you were to pass away, there are going to be right off the bat with your money, and let's assume $500,000 in this case was zero growth, no growth in the marketplace whatsoever, just to make things kind of nice and easy. Pass away, first thing you're going to have to do is liquidate that account, right? Well, there are going to be some fees involved with that, right? Whether it's stocks or GICs or whatnot. In this case, I'm kind of using mutual funds. In the sense, there are sort of now, there are fees attached to some mutual funds, deferred sales charge, currently now that are going to be going away in 2023. However, there are still some fees with regards to it. In this case, on average, I used about 4.5%. And again, this is only for illustration purposes only. Again, so there, if we look at that right off the top, it's going to cost you over $22,000 just to liquidate the account. So then on the segregated fund side, there is no cost. All fees are waived at point of death. And then we take a look at probate. Now, most of you may not understand probate, but probate is something where you have to probate your will, your final expenses. Death and taxes are the two constants in the universe that we have to deal with. And this is one of those times where we have to do it. Probate in the Alberta, over $250,000 for this case. It's about $400. But Craig and I have spoken this. It's not about the money, that probate. Not a lot of people understand about probate in the sense where time, you have to file with the Government of Canada, CRA. That could take 2 months, 3 months, up to 6 months. I know one going on 3 years, depending upon the size of your estate. So if you need money during this time for final expenses, kids, travel, whatever you need, so sad, too bad, not there. When your will is finally probated, it now becomes a public document. So privacy is an issue. I can go to the local courthouse, pick up for $25, get a photocopy of your will and know exactly what you left. This would be very damaging if family members or creditors are looking to take advantage of the situation. And also, too, time. It just takes a lot of time. So the third thing is executor. Naming someone to look after your affairs after, it's a pretty stressful situation. Having known people and myself gone through it, you're not really quite clear as to what an executor's responsibilities are. That can leave you in a flux as doing the right job for your mom or dad or whoever's passed away. This will vary, and most family members are named as the executor on the will. But again, not knowing how to do it properly can cause a bit of an issue. And most people just charge the bare minimum of 1% just to subside and make sure it's all paid out. And the last one, if there's any sort of battles with the families or whatnot, legal and accounting fees. So if I were to add up all this at the point of death, we are saving upwards of $42,000 that can be passed on to your loved ones. The other great thing is, as Craig had mentioned, time, probate time. Upon notice of death within 5 to 7 business days, the money can be in the hands of the beneficiary. We look at this solution, simple solution. There's no underwriting. It's not an insurance liability. There is choice and flexibility to take money out of the policy, name beneficiaries. There's a lot of other different features that I could go into. But again, hopefully you understood the benefits of value segregated funds, and have that conversation with Craig. Craig, back to you.
Excellent. Thank you so much, Toby, for the high-level overview of the benefits of segregated funds and the support of working together. And I just wanted to touch on a few points there because our time is quickly coming to an end. But the value of working with Next Level Insurance is the fact that one of the things is you can actually get a hold of us. How many times have you tried to phone a bank and got dial 5, dial 1, dial 3, dial 2? So I'm very, very proud to say that myself and Pat will answer all the calls when they come in. If we cannot get to them, our turnaround time is less than an hour. So we make sure that we are providing value that above discretionary effort to all of our clients. Your funds, your concerns, your issues are very, very important to both myself and Pat. So that's that personalized service that we can offer that as far as that level of service is very hard to get out there these days. Also wanted to talk a little bit on the probate fees there. That's fantastic there, Toby. Thank you for touching on that. Alberta is not so much of a huge cost financially, although you did talk about time, which is significant. Would like to just briefly let everybody know that Next Level Insurance is also licensed in BC and Nova Scotia. So those two provinces have a significant amount of probate fees that are levied on the state settlement, and each province is a little bit different, but we're talking in the thousands of dollars on this example here, extra, that you'd have to pay over and above the Alberta probate fee. So once again, what kind of value can Next Level Insurance offer you working with RBC with insurance on segregated funds? Here's another reason why. And I just can't stress enough. I know I talked about it before and Toby talked about it too, is the time and being able to provide those funds within 5 to 7 days versus it could be years, right? So once again, the value there's performance there. And Toby just mentioned there a little bit, I want to talk a little bit about the process. So each new client to Next Level Insurance, we do a very, very detailed, thorough financial flight plan assessment and needs analysis for every single client. That process is provided through Next Level Insurance, and that cost is taken on by Next Level Insurance, so no cost to you whatsoever. And we make sure that you're not losing money needlessly, and we make sure that you're putting into funds that will serve you long term. Like Toby's reference to looking down the road instead of just right in front of your car. This is what we do. We're here for the long haul. Our outlook is 20 years at least from today. And so we're going to be here with you hand in hand throughout this whole process. And we'll make sure that whatever your needs are, that we will make sure that you are getting those needs met, and that there'll be a reason why that those recommendations are provided to you. And if you have any questions, we'll make sure that every question's answered until you're completely satisfied. So that pretty much takes us to the end of our 30 minutes. I believe we have about 2.5 minutes left. Thanks again there, Pat, for being the moderator. I appreciate that very much. Toby, just before we sign off there, is there any closing words that you would like to add there?
Yeah, I think the important thing when we talk about estate planning is the value of advice, and more so now that people rely on that to listen to other options, and it's all about you. And when you have those open discussions, you tend to be more relaxed and not as stressed as more. There are dynamics of families you can't avoid. There are situations of money that's opened or something. Using and highly recommending working with with professionals such as Craig. When you group all those buckets together, get a second opinion as to what is best, what's most important, and what's necessary for the next steps of if you were to pass away. So pretty much, but thank you for the opportunity to be here today and share some points with you.
Excellent. Excellent. Well, thank you so much, Toby. I appreciate your time and your insight. And thank you, everybody, for tuning in live. And thank you for those that are watching this recording, and would love the opportunity to have further conversations with you all there that need to have your finances taken to the next level. So thanks again, everybody. Have a great rest of your week and summer, and looking forward to talking to you all soon.